The market continues to do well and the real estate pack is actually back in focus. We recently heard from Niranjan Hiranandani this morning. There was an update that came in from Aditya Birla Real Estate as well. The stock that is on our radar is Signature Global, as the brokerage firm NUVAMA has initiated coverage on the stock, a buy call with a target of 1436 rupees. The firm cites the company has built up a robust pre-sales momentum among other factors. So to discuss all of this and more, we have Rajat Kathuria, who joins us now. Rajat, always a pleasure speaking with you. You know, brokerages are bullish on your business right now, but the question we ask always, this year you'd given us a target of 10,000 crores in terms of pre-sales and 6,000 crores in terms of collections. Every conversation that you've had, you were fairly confident that you'll cross that 10,000 crore mark. In fact, almost 12,500 to 13,000 crores is what you'd said you'd achieve in pre-sales this year. But collections of 6,000 crores, you may fall short on that target. We're just about 15 days away from this quarter getting over. How much shorter of the 6,000 crore will you fall on collections, and how much above the 10,000 crore will you go on pre-sales?
Yeah, Mangalam, good morning to you, and thanks for reiterating, the same question you asked me last time. So, Mangalam, see, to put things in perspective, if you look at our this year's of, the year's about to close expected performance vis-a-vis the previous year, we are seeing a very good spike, both in terms of sales and collections. So if you look at the sales, pre-sales effectively, we were around that 7,300 crore mark last year, and we'll cross, let's say, 10,000 crores this year. So which is effectively more than a 35% rise in pre-sales, which we are achieving. As far as collections are concerned, again, there's a very strong spike vis-a-vis the numbers we achieved last year. It's possible that we'll probably not touch 6,000 crores, but if you look at with perspective to previous year collections, I think there's a strong hike in that collection number. And the other very simple correlation between the two parameters is that most of our sales are happening on construction linked plan. So both the numbers tend to move up in tandem. It could always be that collections happen a month or two later because there's a wide spread of customers whom you're dealing with. But the broader trend is that both pre-sales and collections are looking very healthy.
Rajat, good morning. Thank you for joining in. But that still does not answer our question, right? That Mangalam asked. How much of over 10,000 will you cross for pre-sales, and how short will you fall off that 6,000 mark? You did mention that you will fall short, but by how much, if you could specify that for us?
So, rather the numbers, talk for themselves. It's a matter of, couple of weeks. So I don't want to predict any particular number, but I go with your judgment that we'll cross or very comfortably achieve the pre-sales. But, the collections will probably be better than previous year, but not achieving 6,000 crores.
I'll tell you something that what it overall does is if your pre-sales cross, say, 12,000 crores and your collections don't touch 6,000 crores, say end up at closer to some 5,000 crore odd mark itself. The collection efficiency of 60%, 10,000 and 6,000 crore turns quickly south of 50% itself. So that was one of the concerns. But like you said, over a month or two, those collections would come by as well. But, from a fundamental standpoint, what we wanted to understand is that brokerages are now betting on the premium side of things in your business itself. If I remember correctly, Signature Global did start out as a mid-premium, affordable sort of company. What prompted you to shift to premium? Was it the lack of profitable opportunities there, or was it the supernormal growth that we saw in premium? What caused you to shift?
So I would say that, we have pivoted the model away from affordable because post the pandemic, the land prices went up and it was not very viable to do affordable housing business, which, we started with and basis which, the organization got set up. So, but, we've shifted out of affordable. We are not closing ourselves to any opportunity in times to come. But, I would say that as of today, we are coming up with mid-income products across the micro markets, we are working with. And we've really cemented our position in all these micro markets with fairly good, land situation, at all these three key micro markets. We are coming up with mid-income products. So in today's, even for this year, if you will see, let's say if we sell close to, let's say, 4,000 plus units with an average, unit price of close to, let's say, 2.5 odd crores per unit. I won't say that we are more towards premium. I would still say that, we are more of a mid-income housing player with, working across the price spectrum in the mid-income housing space.
Now, one of the factors might also be because there was no demand in the affordable housing space. Rajat, if you could corroborate that. And part two of my question being the fact that what about margins this time around? You're expecting to be around 35%. When do you see them progressing higher?
The affordable housing has not an issue of demand. It's like supply is constrained to a level that multiple players of our size can just keep operating in affordable housing space, and those homes will keep getting sold. So demand is of that quantum. So it's beyond your and mine imagination the number of affordable units which are needed. Point is that with the current land prices, and if you want to, and the current infrastructure status, if you want to give affordable housing units within city limits or just on the peripheral of city limits, the land prices do not support the kind of, end product price we've worked with for a long span of time. We used to sell homes for like 25, 30 lakhs for almost like 5 to 6 years. We've done close to 20,000 such housing units. But with the current land prices within Gurugram, we can't afford to do it anymore. So it's unaffordable for us, very much affordable for endless number of customers which are there. So that's why, that's the reason we've pivoted to, mid-income homes. As far as margins are concerned, we will enjoy very healthy margins on whatever pre-sales are being done. We are comfortable with, that 35% EBITDA margin, guidance which we've provided, because our land inventory has come at a fairly good price. A lot of that land banking was done while, prices are not spiked. So we are very comfortable with those, margin numbers for this year, or even for the coming year. We'll maintain that guidance.
Right, because, NUVAMA does believe that you can be in net cash by FY27, and your cash operating margins, which are currently at around 35%, can potentially reach 40%. So we just wanted to put on board their expectations and your, whether your reportage will be in line with their expectations, or if you could exceed that as well. Finally, from a real estate company standpoint, the important part is what happens to the ongoing portfolio. You have about 11.2 million square feet of that. By when does that get launched? And what does your launch pipeline look like? This year, you had a target of close to around 16,000 crores. Will you manage to do that? And what have you set yourself up for FY26 and FY27?
So see, launch pipeline remains quite healthy. We are very focused in terms of the micro markets, and even in terms of the ticket size, of the apartment which we want to offer to our customers, so that, while prices have gone up over the last couple of years, we've seen that price rise has moderated, and, we want to offer products at a ticket size which becomes, affordable for the customer. So we are happy that, price rise in the market's not happening at the pace it was happening, in the previous 1 or 2 years. Rather, had it continued to rise at a steep pace, we would have also felt a little uncomfortable. So given the market, prices should not, go up in a, little, I would say, steep manner. They should, they've moderated quite a bit. In terms of our pipeline, we'll continue to come up with projects in our key markets, like on the Southern Peripheral Road and across the, Dwarka Expressway or the Sona Corridor. We have upcoming launches in each of these markets. We are yet to decide the quantum, which we'll do at the start of the coming financial year. So pipelines stays very robust, and, since we are creating strong operating surplus, I agree with NUVAMA that, our operating surplus is almost inching closer to 40%. It was about 38% for the first 9 months. But with about 48% of operating surplus post-taxes, there is room for us to consolidate further.
And this year you'll cross that 13,500 crore mark on launches, right?
We had crossed that within the first 9 months.
And where do you end?
We'll be in between 13.5 to 16, because we are doing some of the larger launches in the first quarter of the coming financial year.
Right, Rajat, thank you so much for sparing time, joining us this morning. Wish you good luck, and we hope to hear more numbers from you the next time we speak to you after your results. There's a management there of Signature Global. But as we wrap on this edition of Chartbusters, here is some good news for our viewers. India's business news leader is now just a click away. But with that, Mangalam and I take your leave on Chartbusters. Thank you for watching. Trading Hour on the other side.